Hello everyone. In today's video, we'll be discussing about what is cost and how to classify the cost. Okay. So let's see that how we can define cost. Now, cost is basically all the amounts of money which an organization is incurring so that it can produce its product or deliver its service to its customers. So that's how you can define the cost. So all the monetary outflow of an organization so that the products can be produced and delivered to the customer, or if it's operating in a service industry, so the service can be delivered to the customer. Now, moving further, we have to understand that there are four different ways of classifying the cost. Either you can classify the cost based on element, on its nature, or based on its function, or based on its behavior. You can see that different ways of classifications are used for different purposes. Let's say, for example, element would be used so that you can control your cost. For cost accounting, you have to classify the cost based on its nature. For financial accounting and for external reporting, you divide the cost based on its function. For your budgeting and for taking decisions, you have to divide the cost based on its behavior. Now, I'll explain one by one in more detail so that you can understand that how we can classify the cost and what purpose does it serves. So first we have to understand that how to classify the cost based on element. So you can classify it into three segments: material, labor, and expenses. So that's the classification based on element. Now, when you say material, it's basically expressed in the SI units, standard international units like kilograms and liters. So let's say if your organization is a bakery, for example, making cakes in that case, so you understand that the flour, the sugar, the oil, all these ingredients which are used in making the cake are all materials, because the flour can be expressed in kgs, the oil can be represented in liters, and so on. So those are all considered to be as your material. Now you also need to consider that those materials are not necessary that they are only used in the production activities. Let's say cleaning of the restaurant or of the bakery. So if you're using any cleaning materials for the restaurant or for the bakery, for instance, would also be considered to be as your materials. Now you can see over here, you have all the materials which you can use in baking a cake, for instance. The second classification over here is labor. Okay. So if you're doing it based on the element, you have material, labor, and expenses. Now, labor is basically all the human resources of the organization. And basically, everyone who is on the payroll is considered to be as a labor. Okay. So now, for instance, here you have the baker. She's making the cake. So whatever you're paying to the baker or to the chef would be considered to be as a labor cost of that bakery. Or if you have an accountant who is not involved in the production but still is working for the organization, will also be considered to be as the labor cost. Lastly, you have the expenses category. So anything which doesn't fall into the first two type of cost, like material and labor, will be considered to be as expenses. These are basically bought-in services of an organization from other organizations, like rent. They have to get the place from the landlord, advertising from an advertising agency, electricity from a utility company. Now, the second way to classify the cost is based on the nature. Okay. So we have two ways of doing that. Either you have direct cost or you have indirect cost. Now, when you say direct cost, those are directly involved in the production of goods and services. I mean, without that cost, the goods and services cannot be produced or been served. Whereas the indirect costs have been incurred, but they don't have any direct relationship with the production. Now, for example, if you see over here, the direct cost, we also call it as prime cost. Now, in direct cost, you have your direct material, direct labor, and direct expenses. So I'll give you an example of each, which will help you to understand it. Now, the flour, the sugar, the oil, whatever we talked about was actually an example of a direct material in the case of this bakery. Okay, because those are the one which are directly involved in the production of the cake. Direct labor, the salary of the chef would be considered to be as a direct labor cost, because without the chef or the baker, you are not being able to make the cake. So that is also involved in as a direct cost. Lastly, you have direct expenses. Now, these expenses, for instance, it could be they are incurred directly for a specific product or a unit. Okay. So, for example, if you have to pay any, let's say, loyalty or on the recipe of the cake, that is considered to be as a direct expense because it's directly involved in producing the cake, the product. And together, we all call it as your prime cost. So direct material, direct labor, and direct expenses together will become your prime cost. Now, indirect costs have another name, which we call it as overheads. So here also you have your indirect material, indirect labor, and indirect expenses. Together we consider them to be as your overheads. Now, the cleaning material, which I gave you an example, would be considered to be as your indirect material because that's not directly involved in making the cake, but still it is a material. You use it so that your bakery is clean, and hence we consider it to be as your indirect material. The accountant, the waiter, for example, in the restaurant, the accountant, the directors, all of them are considered to be as indirect labor because they are not involved in producing the product, the cake. But still, they work for the company, they are on the payroll of the organization, and they run the organization, and hence we consider it to be as your indirect labor. The rent, for example, you talked about the advertising, is not for a specific product. It relates to the whole organization, and we consider it to be as your indirect expenses. Together, we consider it to be as your overheads. Now, the third way to classify the cost is based on function. Now, we have production cost and we have non-production cost. Now, when you say production cost, they relate to the manufacture of production of a or provision of a service. Okay. Whereas non-production not directly associate with the production of business output. So the prime cost or those overheads which are related to the production are considered to be as your production cost. Now, where if you look up in the income statement, you will find those production costs as part of the cost of sales. And from the revenue, if you deduct the cost of sales, you basically get your gross profit. So these production costs are the first one to be deducted from revenues in order to get your gross profit. Whereas non-production overheads come after the gross profit and they are considered to be as your expenses in financial accounting. So when you value the inventory on the face of the balance sheet, you value it on its production cost. Okay. But when you are like for instance, non-production cost is not to be considered as part of the valuation of inventory on the balance sheet. So as I gave you an example, prime cost and production overheads together will be considered to be as your production cost, whereas administration, selling, distribution, and finance costs are all non-production costs. They have nothing to do with the production. and they are treated as expenses after the gross profit in your income statement. Now, the last way to classify the cost is based on the behavior of the cost. And for that, you need to understand the concept of level of activity. So, when you talk about level of activity, it actually means the number of cakes or the number of units you have produced. So, based on that, you need to understand that the cost can fall into these four categories. You have variable cost, you have fixed cost, you have step fixed cost, and you have semi variable cost. Now, what is variable cost over here? Now, basically, this cost will change in direct proportion with the level of activity. Okay. For example, if one cake, let's say, takes 2 kgs of flour at $8 per kg, that makes it up to 16. So if I want to bake another cake, the cost will go to 32. So the more number of units you have, the variable cost will keep on increasing in a direct proportion. However, the variable cost per unit will remain constant. Okay, like that 16 will remain constant, but the more units you make, the total will keep on increasing, like raw material cost or direct labor cost. So, for example, if the labor charges, let's say, $10 per hour. So if he works for 2 hours, you have to pay him 20. So the more level of activity he does, the more cost the company will incur. Now, if you look up in terms of graph, now this is a graph of your total variable cost. You see, if the level of activity was zero, then the cost was also zero. But the more units you make, the cost will keep on increasing. So that's graphically how you represent total variable cost. But if you look on the second graph on the right side, you see that the graph is a constant line. So no matter whatever the level of activity would be, the variable cost per unit will remain fixed. As I gave you 16 per unit, for example. So it will remain 16 per unit for the entire range of the level of activity. Whereas the next one, what you have is fixed cost. Now, fixed cost has nothing to do with the level of activity. It is actually incurred for a specific accounting period, let's say for 1 year. It will remain constant with relevant range of level of activity. It will not change. So no matter you produce or you don't produce any cakes, for example, you still have to pay for it, like the rent. Okay, like the salaries, executive salaries. So all of them will be considered to be as your fixed costs because they have no relationship with the level of activity and you have to incur them. Now the fixed cost per unit will decrease as the level of activity will increase. So the more number of units you make, the fixed cost per unit will keep on decreasing. In total, it will remain same. But if you're talking about per unit, the more number of units you make, the fixed cost per unit will be decreasing. Like I said you an example, the rent of the factory or the rent of the head office or management salaries, they all remain fixed costs no matter whatever the production level is. So if you look it up over here in graphically, you see the total fixed cost will remain same for a certain level of activity. And if you look up the cost per unit, the fixed cost per unit will keep going down as the level of activity is increasing. It won't touch the x-axis, but it can reach very closer to the x-axis. Now, step fixed cost. Now, this type of fixed cost will remain fixed within a certain level of activity. As soon as the level of activity will, the threshold will reach, the fixed cost will also change. Now, for example, a warehouse rent. For example, if a warehouse can store 1,000 cakes, for instance, okay, so till 1,000, the rent of the warehouse, let's say that's 5,000, will remain constant. But in case if you go above 1000 production, you might be needing a separate warehouse for another 5000. Hence, the total cost of the rent will become 10,000. So uh, till 1,000, the cost of the warehouse was 5,000. But as you made your production more than 1,000, let's say till another 2,000, you need another place. You have to pay another rent too, and hence the total fixed cost will become 10,000. So till 2,000 cakes, your fixed cost will remain at 10,000. But after 2000, again, if you increase your production, you might need a separate warehouse and the rent will increase. So if you look it up graphically over here, let's suppose this was 1000 cake and your rent over here was 5000. But as you go above 1000 level of activity, the rent has jumped to 10,000, and till 2000 units, it will remain at 10,000 and so further. Because the graph is making like a step shape, we call it as step fixed cost. Now, the next one, what we have is your semi-variable cost, or even we call it as semi-fixed cost, or we can even call it as mixed cost. Now, these type of costs have both the elements. They have fixed elements as well as the variable cost elements. Okay. Now, it's partly affected by the changes in level of activity because it has the variable element. So the more the level of activity, the variable part of the semi cost will increase. The cost per unit will decrease as the level of activity increases, but will not go below the variable cost per unit. Now, see, the more number of units you will make, the total cost will definitely increase, but the cost per unit will reduce. It will reduce to a certain point, which is variable cost per unit, because that, as you know, that it remains fixed. So it cannot go below that, but it will come to a level almost closer to the variable cost per unit. Now, let's say if your telephone and electricity bills, you have to pay a fixed charge on them, and then based on your consumption, you have to pay your telephone or your electricity bill. So that is actually an example of a semi-variable. So I have, let's say, a phone, maybe $200 is a fixed rental charge, but then the more number of calls I make, the bill will increase, the cost will increase. So this is an example of a semi-variable cost or a mixed cost, or you can even call it as your semi-fixed cost. Now, if you look up at graph over here, this cost doesn't start from the origin, because no matter whatever the level of activity is, whether I make a call or I don't make a call, I still have to pay fixed cost of 5,000 or 100 or whatever it is. And based on the number of calls, my total cost will increase. So if you see that this graph doesn't start from the origin, it starts from here, which is the fixed element, let's say $200. And based on the number of calls, it will keep on increasing. But if you look up at the second graph, which is per unit, in that case, you see that the cost per unit is going down. But I have made a line over here that it will not go below the variable cost per unit. Now, if you compare it with the fixed cost per unit graph, I'll show it to you. The fixed cost per unit is coming down as closer to the x-axis it can possibly be. But when we were talking about this semi-variable cost, in that case it will not go closer to the x-axis. It will have a straight line once it has reached to or closer to the variable cost per unit. Now, a cost card basically details all the costs which you have incurred to make the product. Okay, so for the cake, what we were talking about, we might have used direct material, direct labor, direct expenses. So you see, you get the prime cost. Then the overheads, the indirect cost or the overheads, you classify them between production and non production. Now, in production, you might have some of them as variable, which might be changing with respect to the level of activity. So if you add them, you get your marginal production cost. And then if you add your fixed production overheads, you get your total production cost. And after that, if you add up your non-production overheads, you get your total cost. Based on that, you can add up your profit and you will get the selling price. So basically, all these details, what you have, are written on the cost card. Okay. Now, what are cost objects? Any activity for which a separate measurement of cost is undertaken. So, for example, cost of producing a product, so cost of making a cake, for example, cost of giving you a lecture, for example, these are all cost objects for which we calculate that how much cost is being incurred, or how much cost was it to run the baking department, for instance, or the accounts department, or if this bakery is at a global level, for example, so how much cost was running a specific regional office of that bakery company. And then you have cost units. Now, it's a unit of a product or service in relation to which costs are ascertained. Now, for example, room cost in a hotel. So the hotel might be calculating that what is the only the room cost of a specific customer who stays for, let's say, one day in the hotel, or a kilogram of flour for a bakery. So for that, it becomes a cost unit. Okay. A kilogram of flour for a bakery. Inpatient cost in a hospital. So let's say how much cost per patient the hospital has to incur. So this is cost unit. It's more detailed than a cost object actually. Now, moving further, we have how we can identify the cost behaviors. Okay. Now, see, here you have four different types of cost: cost A, cost B, cost C, and D. And this is the level of activity over here: 1,000, 3,000, 5,000, 7,000. You can say maybe, let's say it's cakes. Now, the first cost, if you see, it's 19,000, 33, 47, and 61. So based on the numbers, I have to identify that what type of behavior this cost is showing. The second cost, 19205760969,600 and so on. C, if you see, it remains 7,000, 7,000, 7,000, 7,000. So now it's very obvious to understand that C is a fixed cost, because no matter how many cakes I produce, the fixed cost will remain constant. So the cost C is straightforward, a fixed cost. If you look up for D, it remains at 12,500 for 1,000 and 3,000 units. But when it's 5,000 and 7,000, there's an increase in this cost and it remains constant at 17,000. So that is an example of a step fixed cost. But for the first two, what you have to simply do is that you need to divide it. Okay. So what I'm going to do is 19,000 divided by 1,000. So you get 19. And likewise. So if the cost per unit is going down, this is considered to be as your semi-variable cost. But if the cost per unit is constant, we consider it to be as your variable cost. So the fixed cost and the step fixed cost was quite common. You can understand it from its total. But for the other two costs, which was cost A and B, you need to divide it, the cost and the number of units. If the cost per unit at all that levels of activity is constant, we consider it to be as your variable cost. However, if the cost per unit is going down, we consider it to be as your semi-variable cost. Now, here we have a method called as high-low method. It's a method which you can use to approximate or identify the variable cost per unit and the total fixed cost from a mixed cost or semi-variable or semi-fixed cost. Okay. So that we can predict the future cost for certain levels of activity. So if I have been given a total mixed cost, which has some parts of variable and some parts of fixed, I can use high-low method in order to differentiate between them. Now, how we are going to do, here you have a question, a data. Let's say in January, the bakery made 200 cakes. In February, they made 300. And in March, they made 400. And this was the cost being incurred, 7,000, 8,000, and 9,000. What I have to do is that I have to see that which is the highest and the lowest level of activity. Okay. So the highest was in March, where I made 400 cakes. The lowest was in January when I made 200 cakes. And at that time, the cost was 7,000. And if when I made 400 cakes, the total cost was 9,000. So the step one, which you're going to do when you're facing with a high-low method problem, is that you need to identify which is the highest and the lowest level of activity. Once you have done that, you can now determine the variable cost per unit by using a formula, which is you have to take the difference between the cost at the highest and the lowest level of activity. So total cost at high activity level minus the total cost at low activity level. So if you see, the total cost at high activity level is 9,000 and the total cost at the lowest level of activity is 7,000. So the difference between them is 2,000. And likewise, you also have to do the difference between the units, which is 400 and 200. So divide by the total units at high level of activity and the total units at low level of activity. So if I put it up into the formula, as I told you, 9,000 minus 7,000 divide by 400 minus 200, you get 10 per unit. So that's the variable cost per unit. Now, once you have identified the variable cost per unit, you can determine the total fixed cost also. You can use any of the level of activities over there. Either you can take the highest level of activity or you can even take the lowest level of activity. For the presentation purposes, I've taken the highest level of activity. And as you know that this is a formula, total cost is equal to total fixed cost plus total variable cost. At highest level of activity, our total cost was 9,000. Okay, I'll show you. Here. So the total cost at high activity level was 9,000 and the number of units what we're talking about is 400. So total cost is 9,000. This is what I need to figure out, that what's going to be my total fixed cost. Total variable cost is 400, the level of activity, and the variable cost which I determined was 10 in step 2. So once you have done it, 400 multiplied by 10, you get 4,000. So if from 9,000, 4,000 is variable, so the total fixed cost would remain to be as 5,000. Now, we can use this to predict the total cost for the future periods. So let's suppose this is going to be our equation now, that if I want to find out the total cost for, let's say, the month of April, I know that my fixed cost is a 5,000, it's an approximation, and the variable cost per cake was 10. So let's say if in the month of April, if I'm making 600 units, so 600 multiplied by 10, 6,000 will be my variable cost and 5,000 is fixed. So in that case, I have to pay a total cost of 11,000. So you can see that I have to make up a budget of 11,000 for the month of April. High-low method used helped me in order to differentiate between the variable and the fixed cost from a total cost. Based on this, I can budget, I can predict for the future. Now, we do have high-low method again over here, but now it will be with step fixed cost. Okay, so see, now that's the data. 4,000 cakes, if I was making, the total cost was 40,800. 6,000, the total cost was 50,000. 7,500, it was 54,800. Now, what does the data says further? That there is a step up in the fixed cost of 10 percentage when the level of activity exceeds 5,500 units. So my fixed cost will increase by 10 percentage if the level of activity has exceeded by 5,500 units. So if I go back, you see 5,500. So this level and this level qualifies. This one does not has any step up in the fixed cost because it didn't exceeded more than 5,500. Hence, 4,000 level of activity, despite the lowest level of activity, will become irrelevant. Okay. In that case, the levels of activity with similar characteristic will be chosen. So what I mean is that you don't have to choose with 4,000, but you will be choosing the other two levels of activity, which is 6,000 and 7,500. So this 4,000 becomes irrelevant. 6,000 will become your lowest level of activity, and 7,500 will become your highest level of activity. So you have to make sure that it's not always the highest and the lowest level of activity, but the characteristics should also be similar. Okay. So 6,000 and 7,500 both exceed 5,500 level of activity, and hence there is a step up of fixed cost of 10 percentage in both of them. So this will become the relevant levels of activity, and from there you can choose your highest and the lowest one. So back again with the variable cost per unit, you have to take the difference between the cost at the highest level of activity and the lowest level of activity, which in this case will become 4,800. If you see 54,800 minus 50,000, you get 4,800. 75 minus 6,000, you get 1,500. So if you put up in the equation, you get 3.2, which is your variable cost per unit. Now, you can use any of the levels of activity and you can find out your fixed cost. I've chosen the lowest level of activity. So 6,000 multiplied by 3.2, you get 19,200. Your total cost was 50,000 when you were talking about 6,000, the lowest level of activity. And hence, your total fixed cost will be at 30,800. Now, this fixed cost already has a step up of 10 percentage because the level of activity has exceeded 5,500 units. So the fixed cost at above 5,500 unit is going to be 30,800, but I also need to figure out that what is my normal fixed cost when there is no step up. Okay. So for that, this 30,800 represents 110 percentage. Okay. I need to find 100. So 100 divided by 110 multiplied by 30,800, you will get your fixed cost, which is going to be below 5,500 unit level, and that's of 28,000. Because if you take 28,000, your normal fixed cost, and you add up 10 percentage of that, which is 2,800, you will come up to a total of 30,800. So if the level of activity is below 5,500 units, your fixed costs are at 28,000, 28K. But once you exceed 5,500 unit level, it will increase by 2,800 and it will become 30,800. I couldn't do it with 4,000 because in that case, then I just have one level. But if I take 6,000 and 7,500 level of activity, in that cases, both of them are having similar characteristics, and I do have highest and the lowest one, which help me to perform the calculation further. Now, one more complication in high-low method, which changes in variable cost. Now, it's the same question which we started with in order to understand the high-low method. But here we have a point that the variable cost per unit will fall by 10 percentage for activity levels above 350. So this is the same question which we did before. Now they are saying that the variable cost will go down by 10 percentage if the level of activity is above 350 units. So above 350, we only have one over here, which is 400. and hence it becomes irrelevant. But this two will become the relevant ones, the January and the February one. Okay. As I explained you before also, that we want two levels of activity having similar characteristics. So here the variable cost per unit is obviously fallen by 10%, but here it's not, it's going to be the normal one. So this will become 300 will become our highest level of activity, and 200 will become our lowest level of activity. So you can adopt the formula. The difference is 8,000 minus 7,000, you get 1,000, and 300 minus 200, you get 100. So if I put up into the formula, it's 1,000 divided by 100, I get 10 per unit. That's the variable cost if the level of activity is below 350 units. But if the if the level of activity is above 350, then there is a reduction in the variable cost of 10 percentage, and hence it will be 90 percentage of the normal one. So that's 9 in that case. Now you can determine the fixed cost also by using the same formula. In this case, again, I'm using the lowest one. So 200 multiplied by 10 was 2,000. 7,000 was your total cost. So if you subtract 2 from 7, your total cost, you will get 5,000 as your fixed cost. Okay, so this is the equation. If the level of activity is below 350, so 5,000 remains your fixed cost, 10, and you can multiply with the level of activity. Equation, if the level of activity is above 350, in that case, the variable cost will be 9 rather than 10. The rest of the equation will remain same. Now, this whole equation, we have different names for it. So if you talk about the total cost, I can say we call it as a dependent variable, because the total cost will depend on the level of activity. The level of activity can be any number, and hence we call it as your independent variable. We represent it with X on X-axis. Y is your total cost, that's dependent variable, dependent on what the level of activity. The total fixed cost is called as the intercept, or we represent it with A. Variable cost per unit is called the gradient, which is B. So the more variable cost, the gradient will keep on increasing. The fixed cost is the intercept, where the fixed cost starts. The total cost starts in the graph. Moving further, now you have a concept of responsibility accounting and center. Now, the individual parts of the business, they are called as responsibility centers. And for every center, there is a manager who will be responsible for that center. And the concept is called as responsibility accounting. Now, if you see the responsibility centers, we have them into 4 different types: cost center, revenue center, profit center, and investment center. Now, if you talk about cost center, it can be a production or a service location, function, activity, or equipment whose costs are identified and recorded. Now, for example, the baking department is one function or one activity for which you are identifying that how much cost was being incurred, and you record the cost based on that. So that baking department is considered to be as a cost center. Now, the manager of that baking department's performance will be judged on whether he was able to reduce the cost or whether he incurred cost as per the target actually. Okay. Now, the next centers, what we have are your revenue centers. Okay. So these are those parts of the organization that earns revenues. They are similar to the cost centers, but but for them only revenues are being recorded. Okay. So let's suppose if you have a regional manager of that bakery company, his performance will be judged on the basis of revenues, what his specific region has earned for the company. So that is considered to be as a revenue center. Then you have your profit centers, for which it's a part of the business for which both the cost and the revenues are being recorded. Okay. Now, if you have a large organization, every division of that large organization will become a profit center, because for every division there will be costs being recorded and the revenues being earned by the division are to be recorded. So in that case, the manager performance is based on how much profits that specific center has earned, or that specific division has been earned. So divisions can be considered to be as profit centers for the organization. Lastly, you have your investment centers. Now, managers are responsible in this case for the investment decision, as well as for how well they earn revenues and how well they control their cost. So, UK division of a multinational company. So, the manager of the UK division will have full authority on what investments to do and how to control the cost and the revenues with respect to that investment. His performance will be measured on the concept of return on capital employed. So, how much money was employed in that division, which is actually given in the hands of the manager, and then how much return he earned from it. So, that's how you can evaluate the performance of an investment center, in which the managers are not only accountable for the revenues and the costs, but also with respect to the investment decision as to how they have decided to utilize those funds. Now, you have cost code. Now, when you're talking about costing, uh, they are given a code. A code is a system of symbol designed to be applied to a classified set of items, so that you have a brief, accurate reference which will help you in recording and analyzing. Okay, so a cost code is a code used in the costing system. Now, how you determine the cost code? See, first you determine the cost center. Let's say we say canteen. Canteen, where your employees and your staff eat food and have their lunch and break. So we gave a code to that canteen, 15. Then we determine the expense category, which is also called as the generic or the functional code. So canteen might be doing some sort of food purchases. So that's the expense of the canteen. And food purchases have a specific, have a generic or a functional code of 02. Then what exactly has been expensed, what exactly has been purchased, which item of food has been purchased. So for example, if it's the frozen chicken, and you go into a further more detailed code called as a specific code, which is 07. Hence, 150207 means that it's the cost of the canteen of food purchase and what exactly we are purchasing frozen chicken. So frozen chicken, the food purchases of the canteen. This, instead of writing it in complete detail, you can just simply use a code which will be easy for the company to record and to analyze too. Now, you have a number of coding systems over here. You have sequential codes, you have block codes, hierarchical codes, significant digit code, field code, and mnemonic code. Now, when you talk about sequential code, each code follows a numerical or alphabetical sequence. So you see, like motor expense 001. Okay. So electricity expense 002. So it goes in a sequential numbering. Like if you have seen a checkbook, all the checks are sequentially numbered, or the currency, it's all sequentially numbered. Then you have block code. Now they categorize the sequential codes together. So for example, you have 0000 to 999 considered to be as expenses. So all that all the expenses of the organization can fall within that one block code. Then from 1000 to 1999, you have all the block code for your revenues. From 2000 onwards, you can put for your non-current assets. Hierarchical code, for each digit in the code represents a classification. So if I say 1, 2, and 3, now 1 stands for revenue, okay? 2 stands for the region. 3 stands for the product name. So now I have this one, this could be revenue, let's say 1 for revenue, 2 for expense, 3 for asset, it can be anything. 2 stands for the region, okay, and 3 stands for the product name. So yeah, so if I say 1, 2, and 1.2.3, I actually mean to say that it's the revenue of a specific region of a specific product. Then you have your significant digit code. Now, significant digit code, like for instance, if I say 2000 represents the item of biscuits which you're using to make the cake. Now, if it becomes 2010 or 2020, it means that then it's 10 biscuits packet, in one packet of biscuits, or there are 20 biscuits in one packet of biscuits. So a code that contains individual digits and letters that are used to represent features of the coded item. You have field code. Now it is broken down into several fields, each of which signifies a unit of information. Now in this case, you see that you have region, Asia, USA. The code for them is 0102. Department, you have sales and production. The code is 01 and 02. Then you have mnemonic code, which actually means something which helps you with learning and memory or understanding. So instead of writing direct material, I can just simply write it down DM. So it's quite easy to remember and understand. Or NCF for non-current assets. So we call them as your mnemonic codes. Thank you very much. If you have any question, please you can post it in your comments and I'll be happy to answer them.